stock that we should be looking at during a downturn, right? So, again, this is what we have been talking about. We're going to address this. Again, the topic is about Walmart misses earnings. What's going to happen? What's the market outlook? We're going to go through the transcript a little bit, look at the market. Basically, is there any resistance? Should we hold? Should we buy more? Should we stay on the sidelines? You know what it is. But before, the drill, before we go on, appreciate it if you guys can actually smash that like button, smash that heart button, guys, because we want to spread the algos. So subscribe, to us if you haven't, and let's get to it. So let's start with the S&P 500, right? Let's start with the S&P 500, and it's actually at a sort of a critical, support. Now, this is in a way good news because you see how crazy the S&P 500 went. The reason why I said good news is because there's a long, tail on the candle, which means buyers is in control. But, last night for me, my time was kind of freaky, right? So they dropped, 2% down and whatever. So we are basically 18% from the highs. NASDAQ is already a bear market still. Is it 30%, I guess? 28. So before that, it was 30.8, right? So it's crazy. Now, in doing times like these, we are supposed to, buy staples, right? We are supposed to buy staples. But if you track back 2008, all the stocks have been all going down, right? Ever since, there's a period where everything goes down before stocks go up. And what are the sectors that go up? And we discussed this before in sector rotation, staples, right? Staples. So why we're going to address this today, but why is this crucial is because, see, if you were an investor, right? There's a lot of types of investors. You buy and hold all the way. You can just pile up more DCA on your long-term winner stocks. There's a lot of things to do, right? You can either deploy the 70-30 strategy, which we talked about before. The 70-30 meaning 70 is on your long-term, 30 is in your short-term. And I can bear in mind, I'm having fun with the 70-30, right? I do a lot of I bet a lot of stocks in Malaysia. I'm having a lot of fun there because there are some stocks, regardless of the market, it's still just piling on more. I don't mind sharing with you guys right now, right? So let's see. We went in gene tech, right? I know you guys, majority of you guys can't really, sort of trade Bursa meaning KL stocks, and it's fine. I'm just sharing with you guys. I'm having fun. Right, so gene tech is a tech stock. It's supposed to be a long-term investment, but I sold off. So here's the thing. I'm going to share with you guys. It's somewhat like a martingale strategy, right? So if you guys don't want to do it, it's fine. It's sort of not to say risky. It's actually calculated, right? So here's the story about gene tech. I've been investing in gene tech since 270. Right, so it went to the highs. I was profiting off, let's see, 35%, 36%, 40%, and I didn't sell. Right, it's supposed to be an investment. So beginning of the year, as we all know, well, November, right? November, that's where stocks started to just fall off, and eventually, it went up and it go down. It goes down. It goes up. It goes down. So I was actually down 40-50% on gene tech. And it's the similar case on Upstart. We'll share with you guys later, right? So what happened was, that was like, I haven't fully built up my position. So that was like, stage 2 of pumping in more money to get more shares. So what happened was, it just fell off, right? And I didn't sell. I didn't panic sell because it's an investment. So that's the beauty, right? I'm going through my step-to-step process, and I'm saying, right, the reason why did I buy in the first place? Okay, the reason why I bought was, it's automation. Their client is Tesla, by the way, right? So it's a no-brainer for Tesla to get jobs in Malaysia because of cheap labor, and there's so many things. So what happened was, I held, right? I was down, 30%, all the way to 50%. So what did I decide to do? Since I haven't fully built up my position, I went on bigger. I went on big, okay, big, when during the dip. Now you can argue that, hey, Warren, you got the money to go big. I don't. Well, that's fair. That is fair. Okay. For those of you that have been fully building out your position since 2021, and you can't have the cash to build on more, pile on more because it's a huge loss. Well, it's too bad, right? But that's why going in tranches is so important, regardless of what's happening, right? So this particular stock goes down 30%, you add a tranche. It goes down 20%, you add a tranche. It goes down 50%, you add a tranche. So it's sort of like it's something like a martingale strategy when you double down or when it's going down, right? So here's the thing, and this is what I want to talk about. So this is exactly what happened. I pile on big, and in the end, during the run up, right, there was this huge time when the stock market pulled back. I actually profited. When I profited, I let go, right? I know it's a long-term play, but I let go of nearly all third quarter of my stocks. Okay, third quarter of my stocks, and I sold it on a profit. Now that's position of power, by the way, right? Martingale involves doubling down as it goes lower, but it's a calculated strategy because you're going in tranches all the way. Now you never know how the stock will go, but you have a cushion of the fundamentals, assessing whether they will not go down under during a recession. And this applies to all stocks, guys, not just GeneTech, all stocks. So it implies a lot of things. It implies you actually, again, deploying in tranches, right? Going bigger when it dips further. I know now, and this is very possible in this market scenario right now. Not so much when it goes down just 5 to 10%. I know you get hand itchy, but the style is actually to go pile on more and allocate a significant sum to this stock that you want to go in, right? So there's a dilemma because I have that 30-70 principle, and the 30 goes to just, okay, I can just sell off on the stock on one day, right? A few hours, 2 weeks, because that's the short-term play, right? And the idea is to allocate more capital. Short-term play goes to long-term, right? So I think it's very important. I think you guys should consider using this strategy. I did, right? So what happened in GeneTech was I shared in my group, right? You guys can check it out. But anyway, so what happened was GeneTech, it went down again. And by then I already sold, third quarter of my position. I bought again. I bought again because the market is crazy. It's even crazier than how it was in March. The dip was crazy, right? Nasdaq's at 28%. S&P is at 18%. And of course, in Malaysia, we hear some things, right? Good earnings, fund flow. We all know these things. Well, I mean, not we all. I mean, me and my circle of contacts, right? We know this thing. So we pile on more, and then we're having fun, right? We're up, a few percent. And we bought it at 187, and then we're sort of up. Now, the key thing I'm trying to say is that I can have this flexibility because I have liquidity. I have that 30-70, right? That allows me to do that. So that's where portfolio management comes in during these times, right? Here's another stock, hibiscus, oil and gas, right? All energy is the sector of the year, right? So if you are not, building your convictions on energy, it's most likely your portfolio is actually going down, right? Because energy is the only portfolio that's actually remaining strong. And we've been talking about Oxy, Consol. These are solid stocks, right? So thermal coal stocks, oil and gas stocks. We talked about Devon, ConocoPhillips. We talked about that before. I'm not sure if you guys actually listen to our my lives and my videos, but yeah. So I think that if you want to hedge your portfolios, energy is the way to go. 30-70 as well going into this. I'm not planning to marry the stock, so this is it. TechScam, which is freaking unbelievable, which is a, it's a Malaysian stock. Unbelievable. 30, 70 here. And this is Sushi King, right? They bought over Sushi King. They're doing well in Vietnam. They're doing well in Southeast Asia. These are, great stocks. And Heng Yuan, because of crack spreads and oil refineries, better margins. This is another stock, that I want to talk about. So we're having fun. I'm having fun with my group. We're having fun in Upstart. So this is exactly what happened at Upstart, right? I was actually in Upstart. My cost basis was 116. And this is martingale again. So it was 116. And how the heck did I know it will drop down to 23, right? But I did post about it before. So what happened at Upstart was I didn't sell. It's supposed to be a funda / trading position, which failed on the trading side. But I love the funda. So, what happened was I bought in tranches, right? 116, it went down to 85. Actually, I didn't touch because I thought the market would be freaking out. And then it went up again. I'm like, oh shit, why didn't I do that? But eventually it went down all the way here. And I was like, okay, something's up. I bought a tranche, went back up. Then before earnings, I was still negative, by the way. I was negative like 30%. It just dropped to like negative 75% for me. And I was like, okay, you know what? Time to pile in big, right? Why? It's crazy. It's oversold. And it's the same case as Walmart. We're going to touch about that. It's oversold position maximum for not really no reason, but I think it's unwarranted. It's crazy. How can you drop 50% on missing guidance by 150M? Now, the market is always forward looking, right? It prices in things early. So that's where it's good because people can take advantage of that, especially people with 30-70 portfolio allocation. Does that make sense? Because with your 30-70, right, you can actually go in and out fast. Right? The stock market is always forward looking so that you are actually getting it early than usual. You're profiting early. You're losing money early. You're cutting loss early, right? So my point I want to say is, eventually I got out of this trade. I profited like $100, like 0.+%, and I just went out yesterday, 52. I still remember I queued at 52, and then the market's freaked out again today. So lucky that I did, but I'm having fun, right? I know it's not fun for a lot of you. I'm still holding on to my Oxy. It's actually like it's an investment trade. I'm still holding on to my console. It's crazy. So yeah, that's what I'm doing, right? That's what I'm doing. So let's talk. We talked about the market. We talked about portfolio strategy 30-70, and I think it's crucial. Talking about liquidity, talking about going in tranches, right? You could have, like, for example, if you have 100,000, and if you allocated that 100,000 or 50,000, whatever it is, on Tesla, for example, the way we could go in tranches is actually so that we can have bullets, right? We are in the game. The most important in this, stock market right now is that we are in the game, right? So what's in the game is basically, what I mean by that is basically, okay, let's say you like Tesla as it goes down. We don't just all in 50K. And so step one, allocate the amount that you want to go into Tesla. And I'm talking about the new, people who have not built positions yet or are already in, it doesn't matter, right? Let's say you have 50K allocated, you want to pump in more during this weakness. And it's fun because we can do this now, right? It's easier to project shit now. So that's why we can do it. And you can just hold cash, it doesn't matter, right? But this is the way if you want a DCA, right? So let's say you got 50K. And it goes down to 660. You liked it when it was 1,000. So why don't you like it when it's 660, right? Let's put it that way. So it goes down to 660. You don't just deploy 50K all the way. You could deploy 5K when it goes to 650. You can set another 20, 15% to go now 10K as it goes down, right? Then you go 15K, as long as it adds up to 50K at the end, then you can have your buy strategy already, right? So it's 5, 10, 15, 35, all the way, But this 50K, bear in mind, step number one is you allocate a strong winner, right? Fundamentally. Tesla is going down because of ESG index, Twitter, nothing to do with the company. That's when I love to buy, right? So yeah, Tesla, uh, uh, identify that by 2023, they're going to reach X amount, 2.5 trillion market cap. How do you get that? We reveal it before the post. Yeah. Number three is allocate your money that you're going to touch, not going to touch in 5 years because your inflow is actually decent. I know during recession is hard. You might get laid off or whatever, but assess that as well, right? Assess that amount, 50K, or whatever is a percentage of your that is comfortable with your portfolio, right? So allocate that, and let's say it's 50K. Then the step number 4 is actually make sure that it's a decent percentage overall in your portfolio, right? And you can just hold cash; it doesn't matter. But as long as we have bullets in the game, that's what matters, right? Liquidity. Yeah. So we talked about that. We talked about where the market is. So I'm gonna defend myself because we talked about Walmart, right? We talked about sector rotation. We talked about during bad times we should go to staples, but staples are getting a hit. So shit, should we panic? I don't think so. I don't think so. Here's why. So the reason why inflation is a bitch, right? Let's put it that way. Inflation is actually affecting everything. So Target, Walmart missing earnings is actually the same case. What same case? Inflation. Bigger ticket items that they're getting better margins on. Sorry, my flu. That they're getting better margins on is going down. Is going down, right? Because like TVs, bigger ticket items, people won't buy it because of inflation, right? It's going higher, higher, higher. So what do? No sales on that. But revenue overall is increasing because of other low ticket items. So what my point is Walmart Target valuation too high in the first place? That's number one. And then let's pull up Finviz, right? This is the first time I actually checked them out, right? In Finviz. So Walmart. So a PE of 24, forward PE of 16. Now, the key thing to know about forward PE is that these projections might be wrong in the first place because of a recession. We did not anticipate, we always anticipate, oh yes, growing earnings, right? But we did not anticipate bigger ticket items, not, well, we should anticipate that because it's, reality. But what I'm trying to say is we should anticipate that, okay, what is the worst case scenario, lower margins that Walmart and Costco and all that they can actually attain comfortably, right? Because their profit margins are low anyway. But what is the decent PE that we should determine during these times right now? So there's a huge sell. What I'm seeing is actually a good pullback opportunity, right? Missing earnings going down 20% is a bit unwarranted. Okay, it's a bit unwarranted, guys. So look at that. P of 24, market cap 326, right? Historical PE has always been 16, 15, right? Forward P of 16. Well, I might add a tranche. Well, sorry, I haven't started my position yet. I might start a position, right? So that's me. It's the same thing. Bigger ticket items, target blame, profit shortfall, freight costs as well. So again, the root cause of this whole fucking scenario is inflation. If we don't see that curve down on inflation getting better, the markets are going to freak out even more. So all eyes on inflation, all eyes on the 10 yield interest rates, because as that increases, then obviously stocks will get more pain. All eyes on midterm, elections this year, November. Most likely stocks are going to remain volatile before that, but we are definitely going to see something turn up in the end of the year. Whether inflation is going to get better, interest rates are going to get better, and the midterm elections, we're definitely going to see something, right? So hold on to your cash. What I'm trying to say is hold on to your cash. Hold on, pick your buy plans, right? Go, strong on liquidity, right? Have a defensive portfolio set up, right? Walmart, again, it's the same thing, right? The same part of driving inventory up is food, right? Why? One of the reasons also inventory, right? They're keeping too much, they can't offload, and inflation is a bitch because bigger discretionary items, like again, bigger ticket, items are not going unsold, right? All these things, blah blah blah. So yeah, this is the reason. It's the same thing. Inflation is the core reason. So what do we do? Liquidity, flexible portfolio, 30-70 if you can. If you don't, it's fine. Keep a good decent amount of cash. Be patient because there's so many opportunities in the market. Energy was opportunity. Pullbacks are opportunity if you have got the balls to go on a pullback, right? Defensives could be an opportunity if you haven't been, piling on now before we mentioned in the video, right? So yeah, there's so many opportunities. I hope you guys are investing safe, and I'll see you guys next week. I'll see you guys in the next video. Bye-bye.